The following program is brought to you by Zencash. You did the work. Zencash helps you get paid.
All of us probably would like to know a little bit about health insurance and what do startups usually do to cover health insurance?
Well, they get an employers-based health program, and what most people don't realize is actually it only takes 2 W-2 employees to get a guaranteed cost issued policy either through Aetna or Kaiser or what have you. So it doesn't. You do need 2 people, but it can be pretty cost effective to do it that way.
Okay. And how many people? You said 2 people.
Yes.
To be in a company.
Yes.
Okay. So.
But they have. But the key here is they have to be W-2 employees. You can have many contractors, but it has to be a minimum of 2 W-2 employees.
So does that make sense to everybody? Or.
Yes.
Okay. So.
What about a founder who's not necessarily W-2?
I
think it works.
Yeah.
But you
Yes.
have to be paying yourself, right? Is
Yes.
that how it works? Okay.
Yeah.
All right. Okay. What percentage when an employer is covering health insurance, what is the percentage required?
Well, there's there's a state law. Actually, there's a city and state law that the employer has to cover a minimum of 55% of the employee's cost of the insurance. So you got to start there, and then it just depends on what you want to do for your employees. Some of my clients cover 100%, some cover 75%, all the way down to the 55%. So it all just depends on what is affordable.
And are they required to have health insurance in all of the U.S. or California?
No, there's no requirement that you have health insurance.
Okay.
Yeah, with the exception of San Francisco's law, which is applicable to, I'm not going to get it right off the top of my head, but some threshold number of employees.
Yes, 50, it's 20.
20 employees. So if you employ 20 people full-time?
Yes.
Full-time.
Full or part-time.
Full or part-time. A lot of restaurants, for example, you guys probably remember hearing about this. It's why your check now has the extra fee for the SF healthcare.
Yes.
Because the city of San Francisco has said if you employ 20 people, you
Yes.
have to provide a certain level of healthcare or money into the bank for healthcare.
Yeah, it's universal healthcare in San Francisco, which actually I think is a good thing.
Yeah, good policy.
Yeah.
Expensive, but good.
Yeah.
We did talk about liability insurance. How much does that usually cost for, is there a range?
Yes,
Okay.
so there's a range, but first you really have to talk about what type of liability insurance. There's 2 types. There's general liability, but really for most of the people in this room, that really doesn't apply to you. So general liability is, for instance, here tonight, RallyPad has a general liability policy, and they're really just covering slip and falls or the lights falling down or something like that. The thing about general liability policy that everyone out there needs to realize is that it doesn't cover your work. So your work product is excluded under a general liability policy. So you're really not getting much covered. So what you have to do is you then look to a different type of policy to get that covered, and that's called professional liability or an E&O policy. So a general liability policy is not expensive. It probably runs you $400 a year, but again, you're not really getting much covered. Professional liability policy, an E&O policy, starts at about $1,000, but really that's what you want. That's what's going to cover your work product. And when we say covered, what we're doing is we're covering you. The insurance company is standing in front of you to defend you if you've caused financial harm to a client. And so that's really what the policy is there to do. You've caused financial harm to a client, they've come to you and threatened to sue you, and your carrier is going to stand in front of you and defend you.
And I go, do you have insurance? Yes, awesome.
Yeah, actually, my father has a building. We're from North Miami, and his building caught on fire maybe like 15 years ago, and because of insurance, it was able to, he was able to recover and rebuild. And he's always saying, get insurance. So
insurance is a good thing.
It's
Absolutely.
It's important. Is there any other type of insurance besides liability insurance that you would recommend to startups or for new businesses?
Well, in general, what you're going to find with insurance is that you need to get a basic policy in place. I would recommend, for most of the people out there, I would recommend a minimum E&O policy. And then what you're going to do is you're going to find that it's really driven by events. And what I find for a lot of my startups, especially in this type of design developer world, is a client, typically a larger client, is going to ask you or demand within that contract that Gabe was just talking about, they're going to demand a certain level of insurance. And that's really kind of the event that drives insurance coverage a lot of times. Either it's you're signing a lease or you have a new client, a big new client that has, paragraphs of insurance requirements. And what you got to realize too there is that the insurance requirements are very boilerplate. And what a lot of my clients don't realize is that a lot of this is negotiable, correct?
Yeah, you do. You see these big paragraphs with any big company in their master services agreement or their master consulting agreement. They want $3 million of CGL, $2 million of EPL or E&O. And it is negotiable with some of them to a certain extent, but often that's how, Jude and I come in contact with the same new client is my client has to get an insurance policy or a bump. And then the other, I think EPLI is something worth talking about for people with employees.
What is EPLI?
EPLI is, so that stands for Employment Practices Insurance. And so what that is that covers you for allegations of sexual harassment, wrongful termination, situations like that. So that is another policy that especially in the startup world, it's really, let's be honest, it's kind of, it's a loosey-goosey environment, which can be great, but it does end up putting company at risk because of situations that occur.
I think one other area that it's probably worthwhile for Jude to talk about is most companies that are getting venture capital funding are required to get something called D&O insurance, which is directors and officers insurance.
Yes.
And it's something that almost all investors require, and it's part of every term sheet that we see.
Yeah, and again, that's another event, just like the big client contract. On an offer sheet from a venture company is going to require you to carry directors and officers insurance. And what you're doing with that insurance is you're actually protecting yourself and the company in case any decision that's made as the board causes financial harm to the investor. So the investor is going to come after the board because they're going to say, hey, you made a bad decision. You cost me $3 million. I'm suing you. And that D&O insurance is going to stand in front of you and defend you. Yes. So the dividing line on the situations of copyright and infringement are often included in an errors and omissions policy. And it goes all the way up to patent infringement. So most E&O policies will cover everything up to patent infringement. And if you need patent infringement insurance, that's a big ticket. Yes.
But if you're making the money, it's worth it because at one nice solid patent troll coming along and nailing you with a patent litigation case, and you're done.
Okay. What about?
Well, hold on a second. So I just wanted just to give you just an example. So
sorry, Andy.
So
I'll wait.
So like I said, so a minimum E&O policy, for a startup is about $1,000. A minimum patent infringement policy that's going to defend you is $20,000. So you can kind of see the level of difference in the pricing.
Hence the markup too. If you get a client that's willing to pay that markup, that's what you use it for. Go buy yourself some patent insurance.
That's the reason you have insurance.
Yes.
You have insurance to a large extent in case you make a mistake.
In case you make a mistake. I mean, errors and omissions, right? Just by the very definition of it. You've made an error. It's caused financial harm to your client. That's why you have the insurance.
But make sure, though, one of the reasons I like Jude is because he understands your business. You go out and get just some insurance broker, at I don't know, there's ads on the radio for insurance brokers. I don't know them. They have to know your business and understand this tech stuff is changing.
Yes.
And there's new riders on these policies and amendments that are being made all the time. I don't understand it. So I look to him to say, is my client's particular business covered for this? You know, developing an application that does this. Stores medical information. I don't know.
Yeah.
So
I just want to mention one other thing too. You just can't do anything illegal. Which maybe
How do you know?
can't get covered for anything illegal. Yeah.
I chopped off his hand.
What about workers' comp? Are they? How does that work usually?
Yeah. So it's, as we mentioned earlier, just real briefly, yeah, it's a state law that anyone that you're paying through W-2 or possibly, you know, it's the gray area with the contracts. We already talked about that. You have to cover their workers' comp, but as I said, it's pretty inexpensive. It's you know, a clerical person's probably about 60 cents per $100 of payroll. A developer's 20 cents per $100 of payroll. So it's very low risk from a workers' comp point of view.
But for the if somebody is having a more dangerous, working a more dangerous job, is it going to cost more for an employer? Or?
Yes. Yeah. Okay. So it you know, you open a retail store, it's probably $5 per $100 of payroll, and then if you're a general contractor and someone's getting on a roof, it's, you know, $50 per $100 of payroll. So it all just depends on the risk of the business.
Okay, risky business.
Risky business.
Okay, and here we will ask a question that kind of bridges the gap between insurance and also finances, and that is a startup required to cover unemployment insurance?
Yes.
Well, it goes back to this question of whether or not it's a contractor or an employee.
Yeah.
And if you have an employee that's working for you, you certainly are required to cover unemployment insurance. And there's both California and federal unemployment insurance benefits that you need to pay. But it goes back to this whole question of, is it a contractor or is it an employee?